Last month, I had a 78% win rate trading only one strategy during one session for 2 hours a day. Not only last month, but for the last 2 years, I have been showing my trading live every single day on YouTube with a track record, trading the same strategy that I want to discuss in this video. I don't want to discuss it in a normal way. I want to break down a 12-week program of how you're going to get from point A to point B in 12 weeks, hopefully leading to profitability. That is a bold statement to stay, so be sure to stay to the end of the video so I can explain exactly how you're going to make that happen and how to lead realistic expectations. So if this sounds like an interesting video to you, leave a like and subscribe if you enjoy it. Stick around to the end and let's get straight into it and discuss this strategy. Alright guys, so I'm going to split this into 4 phases. Each phase is going to be 4 weeks and it's going to be what you're going to do during that 4 weeks. And we're going to dive into the strategy part first. So week number 1 is going to be working on support and resistance. Now it's not the basic support and resistance you view online. Those who have been in my channel have watched this. Luckily, I'm going to timestamp this. I'm also going to share this whole presentation in the description below so you guys can take use of this and follow this plan here. But you need to have these fundamentals. If you've already finished this stuff, then you are one step ahead. You don't need to worry about this. But for all of my beginners, let's go and start. So I'm going to run now onto the charts and talk to you how to mark up your support and resistance. This is your guideline on the charts and the first part of my strategy for the entry model. Alright guys, so as you can see in front of me, I put out the different ways to mark up a chart and I'm going to explain exactly why I use horizontal lines, which are these, right? So first of all, we have trend lines. Now, trend lines is popular. You guys have heard about it. The reason I personally didn't go along the area of trend lines is that I mostly like to look at trading market in ranges. So trading from one zone to the next zone. And I didn't like the subjectivity of trend lines, meaning that they are not 100% certain. Meaning if someone can draw it slightly off, if someone can, do it by the wicks, if someone does it by the body, because those are all rules. So I didn't like that, which is why I didn't use them myself. I'm not out here to slate any strategy that uses it, but I'm explaining why I didn't personally use it myself. I wanted something more concrete, and horizontal lines you can't argue, because if there's a resistance here defined by this bullish candle closing by a bearish, you can't really argue that that's not a resistance, because it's literally what price it could create. So that's the first thing. So the second thing here is going to be supply and demand zones. These are very popular. Or people draw big support and resistances. Like they'll find a big resistance here and they'll just draw it as a whole box like this. This is a resistance zone. I'm looking for sells. I hate that because it's so inaccurate. It's such a large zone and you're really ignoring the fine details of the market that matter. It's good to give a rough idea, very basic concept, but doesn't really teach you much. Supply and demand is a different strategy. You're looking for reactional based trades, not trading with a confirmation, meaning that of you leaving the zone, right? You're looking for price to come into that zone, react, and then get out. But with horizontal lines, it is extremely accurate because you're using one thin line and you can get a perfect close and you can really manage based on that line there. So that is the reason why I went for horizontal lines and marking support and resistance accurately. Because it suited my trading style, because supply and demand, as I explained, is a reactional based trade. I'm looking for a zone to zone. So let's go ahead and show you how I do my top down analysis. This is not some basic support and resistance that doesn't work that people say. This is actually some real horizontal lines that actually work and are actually extremely accurate, as you can see from my trading and of course me showing you live on a daily basis. So let's go ahead and dive into that. So I want to first start off by some very, very basic things here. And this is just going to be an overview just so we cover all intended audiences watching this video. What is a resistance? Resistance when we have a bullish candle followed by one bearish candle close. I said very importantly, listen to the word close. Creates what? Creates a bearish, creates what? Creates a resistance, right? Same thing with a support would be a bearish candle close followed by a bullish candle close will do what? Will create a support. So that's how you define the support and resistance. Now, what if we have 2 candles? The better. 1 candle is minimum to define a support and resistance, but a real high should be 2 candles or more, right? So when we're saying a proper resistance is 2 candles or more, and a proper support is 2 candles or more. What I mean by 2 candles is 2 candles closing bullish away from the one that closed bearish, or 2 candles closing bearish. That's really to define, but that doesn't mean we still ignore 1 candle closures. They're just weaker, because if you think about it, a 1 candle closure on a daily time frame, if you were to go on a 4-hour, it would be multiple candle closures. So it's still strong because it's based on a daily, whereas maybe a 5-minute one, 15-minute is not as obviously as strong as a daily one candle closure, right? That's what I'm trying to get out. So now let's get into how to actually mark up. So you're going to need horizontal lines. I love to name my lines. We're going to use gold here for this example, and we're actually going to start all the way from the monthly time frame, believe it or not. We need to really start from the outside. Now the good thing is you only need to mark this once a month because the candles only close once a month. So you're only marking time frames when candles closes. So monthly time frame, if you look at it, we are far from everything, right? We are at all-time high here, this, so you wouldn't have to scroll back, but on other pairs you can scroll back until you find a support and resistance and mark it. And once you learn from watching this video, so make sure to watch to the end and leave a subscribe and a like if you're enjoying it, by the way. It does really help the content. If we could get it up 500 likes, really does help, and I would appreciate it. You can go back and you'll understand how to mark it. Okay, so we can see nothing to mark. We don't mark this candle because it has not closed yet, right? 22 days till this candle closes. This support down here we don't need to mark because it's so far away, not even a reason to mark. So next time frame we go to a weekly. Same story with this, we only need to mark this once a week. Okay, so let's say we were down here, it would make sense to mark this weekly support here, and I'd name it WS. The reason I mark this, even though it's behind the level, remember resistance can become support. We can get a scenario like that where we retest this zone here. So I do still like to mark those. And then obviously our next resistance, you're always looking most recent, right? You're always focusing on most recent. Don't worry about things super far away. What is the most recent support and resistance? Support is all the way down here. I don't need to mark it because it's super far away from where current price is. I'm always marking relative to where price is. This weekly resistance, look, from here to here is almost 1,000 pips. So I don't really need to be marking these, but to just teach you guys, I personally won't, just to keep my charts cleaner, but just to teach you guys, I'm going to mark it anyways because price is so far from it. It's not really going to be relevant. But once a week, you should mark this, especially if we're close to one of these, okay? Because it's going to be important when you're taking trades, entering on 15-minute, 30-minute, 15, whatever. You need to know because you could be buying straight into weekly resistance. It looks a perfect trade on the 15, but this is really giving you a guideline. It's showing you where and where you cannot trade on the charts, and that's so important. If you're trading in a place where you cannot trade, your trade has a high chance to fail, guys. Has a high chance to fail. So make sure you get this stuff right because it literally is a cheat code, and it's showing you, hey, I have much higher probabilities trading in a zone without resistances and support, and I know my limits where I can place my take profits and where I can enter trades. It's literally giving you a cheat code. As long as you know how to execute with all of the other factors that I teach on my channel, I encourage you to go watch the videos. It really helps, right? It makes things super accurate and makes a plan, and it's just overall something you need, right? So daily time frame is next. So we went monthly, weekly, daily. Now on here, daily time frame, we do have this previous daily. I do like to mark these. So I keep this here daily resistance because right now this is going to be a potential resistance. We can see some reaction, but not fully reacting off it yet. Otherwise, next one is all back here, but like I said, pretty far, man, pretty far. Don't even need to mark it being that far. So again, looking at most recent, we do not mark this daily support. Why? Because the candle has not closed. Don't need to mark it. Move on. Next, we go to 4-hour time frame. We look at 4-hour. Now we have some more. As we get lower, we start to get some more price action. So 4-hour time frame, we mark this one right here. Boom. This is going to be a 4-hour support. And then we look left, always looking left. Where's our next resistance? Not this one, not this one back here, not this one back here. No, most recent. And the most recent resistance is sitting right here. And we mark that 4R for 4-hour resistance. Right, so now we're starting to get our guidelines here. Look how nice this is. This is showing us where we can and we cannot trade. Next time frame I go down to is 1-hour time frame, and I do my markup. Now there's something I use which is trading bias, which means when I come to a session, I have an idea of where I have an idea of if I want to look for buys or look for sells. So if I'm only looking for sells today, there's no point of me marking all resistances up here because I'm looking for price to go down. So if it goes up, I'm not really interested, okay? Same thing if I'm looking for buys, okay? I'm not going to mark all my selling zones. But to show you guys, you know, that's how you can limit your lines. So the next thing here is we have this. So this is an interesting one. What if daily resistance and this 1-hour resistance are very close to each other? In this case, these days, I just put a box like this. The reason I don't move it up is because we reach daily resistance first. I could be taking a plan today where I look to take buys from down here, And if I buy and price suddenly rejects here and my put might take profit here, it's going to be extremely annoying and I'm not going to know why. But that small detail can secure your profit, but you will miss out because you're targeting the high and it doesn't reach the high. It rejects before the high, but we know why it's rejecting before the high, right? So that's definitely a possibility. So I just like to draw a little box like that just to cover those both zones there. When we move on to 30-minute here, we can see that we have a 30-minute support here, right? Most recent, that's a 30-minute support. So we can mark that 30-minute support. You can mark all of these supports down here, all of these. But like I said, when you pick a direction, you don't need to mark all of these. And the next thing is you don't need to mark something you're not going to trade. So for me, from here to here is not a tradable range. It's too small of a range. If you look at the average size of the candles right now, that's a 50 pip candle. And this range is only 35 pips. It's not really worth it. So in this case, I don't even need to mark that range because I'm not looking to trade it. So instead, I'll just keep this simple. I'll move this line down to here because remember this range I'm not trading. I ignore this because it's not somewhere where I'm trading. I'll keep my charts clean. Really want my charts as clean as possible. These people who have tons of support and resistance line, it's fine, but I personally do not like to trade with like that. Like I said, I normally pick a direction. And I'm pretty sure, and I only mark in that. So next time frame we go down to, which is the last time frame of the day, it's going to be the 15-minute time frame, which is my majority of my entry time frame. We can see we have a resistance here, so I know this won't be a tradable range. I will actually put a line there now because I know from here to here I'm not going to look to trade. So I'm going to put a line here. I'm going to put this as 15, and look, our 30-minute support is lining up, so I don't need to remark that. Support down here is also beautifully lining up. And now we have a beautifully marked up chart, and this is where I can plan. So if you watch my trading ranges video, watch my free course, you'll be able to see how to actually take entries on these trades. But now I can see, okay, above here, I have clean area. No obstruction there, right? It is totally clean until this next resistance. I have nothing to worry about, right? We'll check, double check 1 hour clean, 30-minute clean. Everywhere is clean in this zone. So that's an ideal zone, right? You know you will have higher probabilities winning a buy in that zone. Right now, we have this zone here to capitalize on, but everyone's going to be looking to target the highs. But what might happen is we might reject right here. Now, this rejection, let's say you had stop loss below this low, that can stop you out those rejections. So I know if we reject here, I know why, because there's a daily resistance. I've done my homework, right? And today, if I was looking for sells, here I can see it's all choppy, it's a mess. But below here, I know I have some room to trade into, right? So same thing below here. I have a little bit more room. So this is where you can start to build your ranges like this and build this. So I recommend you do this every single day. As a fact, I make the guys in my exclusive group every day send charts for feedback because it will take some practice to get used to it, mark accurate ones, find which ones are relevant, not relevant. But the key rule is I'm always looking at most recent. So if we look at most recent now, most recent support would be this on 15, and most recent resistance would be this. But remember, only mark it if you need to trade that range. If it's not a tradable range, don't waste time. And that's it. So it's a very good drill. You'll need to practice it. Show up to my live streams as well. You can see me and my markup before the live stream compared to my own markups with the pairs I trade, and you will see if you're getting the hang of it or not, and if you can get feedback from me. So I hope you guys enjoyed the video. If you did, let me know in the comments below. Leave a comment. Appreciate you guys as always. Take care, trade sharp, and hopefully catch you guys very, very soon. Peace. Perfect. So now that you've watched support and resistance, the next thing is going to be trading routine. So what I'm going to do for trading routine is in the same place where I dropped this presentation, I'm going to drop my trading routine there. I want to keep this video as short as possible, so we're not going to run through it. But what trading routine is, it's basically what session are you going to trade, London or New York session. I'm going to put the volume times that it makes sense, and that's your routine. So you're going to wake up, trade London session, take 1 to 2 trades, that's it. Then you're going to move on with your day, okay? And you're going to follow the rest of the steps here. But you need to get into that routine because routine builds discipline. Discipline makes you follow a routine, and routine builds a skill that you'll be able to do. So the next step is, that's going to be week 2, making sure you get that routine set. Number 3 is going to be the actual entry strategy. So this is going to be maybe like a 10-15 minute section now. I'm going to go onto the charts and I'm going to talk to you exactly how we're going to execute on this strategy, how we're going to take the trade right now, and what is going to be the plan that we come to the charts every single day and follow, which is part of our routine. So let's get into that. Alright guys, so when it comes to my entry strategy, I've been able to perfect it to a point where I can enter with limited drawdown and be able to enter entries that you can see here. So this has come from an accumulation of understanding basically 4 key concepts that I'm going to explain today in today's video, right? So we're going to keep this short and sweet and to the point so you guys get all the information. So make sure you stay to the end of the video so that you can actually find out all these steps because they are important. So step number 1, it's a basic step, and you can see on the chart I have something called sessions. So in order to get accurate entries, you need to be entering at the right times, and trading in times of volume are very important. Now on gold recently, marked by the blue box here, Asian session has been an outlier. Asian session's been delivering amazing volume, but usually with all pairs, London, New York and NYSE Open are the best times to trade. But as we can see here on gold, obviously it's been delivering some heavy volume during Asian. But that's a consideration that, hey, I'm up during Asian. I'm going to trade Asian because that's where I see better opportunities of volume. So without knowing the sessions, without identifying that, you would miss out. So this indicator is called trading sessions. You can search it on TradingView. So how do we know what time to trade? So my rule of thumb is many people think London Open is the best time to trade. It's actually false. I like to trade 1 hour before London Open and during London Open and only an hour after. So trading a session doesn't mean you get to trade the whole session. It's actually a small pocket window, which is usually 1 hour before and 1 hour after the session open for London. Now in New York, it's actually from New York Open to 1 hour after NYSE. That is your prime time. So whatever time zone you're in, calculate what time is New York Open and 1 hour after NYSE Open. That is your window. That is where you want to be taking trades, okay? So the next thing about my entry strategy, once you understand that part of my entry strategy is taking entries during volume, the second most important thing is going to be closes. This is number 2. 2 out of 4, which is going to be closes. You need to have closes. Why is closes very important? Because they give you confirmation. Now, my most used entry time frame is the 15-minute here, okay? So I'm going to explain to you why closes is very, very, very important here, and how you could easily get faked out. So what we're going to do is we're going to draw a little bit of a scenario. So this is a scenario here that I've drawn on the chart, which is basically price moving up with structure, and then we need to see how we're going to deal with this structure. So let's say our trading zone where we're looking to trade today is going to be above this resistance, and the next step, so you need to stay to the next step, is going to explain how and why trading zones are also important. But I want to explain closures first. It's very common for people to find their entries and start to see price moving very fast. It looks like this on your screen, pumping up and down. You start to seeing it push and boom, you rip buy here before this candle closes. Why? Because you fear that yes, your plan was to take buys today. Yes, your plan was to trade in this zone here. And yes, your plan was to take buys above these highs. That was all your plan. But the last thing to the plan is waiting for the close. You don't, because you start to see it pump like this, starts pumping up and down, and then you're scared you're going to get this candle and miss the move. So what ends up happening, you don't wait for the close and you end up getting a candle that looks something like this, and guess where your entry is? Right here. And it's like the worst possible entry. And then you think that the market's against you. You're like, there's no chance that I can pick this entry. And I'm sure we've all been there. You've literally took an entry right there. And what happens? You've lost all probabilities of your trade, because the probabilities come from candle closures. Because closures are doing what the wicks could not do. Because this price could wick a few times. We could see the next candle as well, close bullish here, but as well leave a wick. Okay, and then the next one, it tries to close above again. You could see this happen again. And I'm sure you've seen price action like this. You see it tries to close above, it fails. It looks something like this, leaving a wick. And then what we finally get is we get a candle closing above. And this candle closing above is the confirmation, because this candle right here, what is this candle doing? This candle is doing what all of these wicks could not do, which is close above. Changes your probabilities massively, gives you a proper stop loss placement, allows you to do this. Now, if you're interested to see how I play stop loss, how I take my entries, do check out my videos. If you're interested to see how I know to look for buys or sells, check out my bias videos. I will link them in the cards up here, the bias video. I will also link my free course at the end of the video. You have that prequel here that shows you. I will link the free course there as well. And if that's valuable for you, leave a subscribe. And also leave a like. I would appreciate it to get above 500 likes. It really does encourage me and shows me that you guys are enjoying it. And if you recommend anything, put them in the comments. So getting back into what I'm talking about here, this is why closures are so important. They change probabilities by a hell of a lot, because all of this is guessing. You're guessing, will price be able to close above? Because once price closes above, it's doing what those candles could not do. Continuation is a whole lot of percentage higher. Now, if you want to know how much percentage higher, I even argue it's up to 40% higher depending on certain external factors. But in a scenario like this, it's like 30-40% higher, which is massive in trading, man, massive. Any percent counts. So when you have that much confirmation, why wouldn't you? So candle closures, 15-minute is the time frame I'm looking at. I will use 5-minute for lower time frame. I just made a video of when to use 5-minute entries. I will link that above there as well. Or you just check my last week's video, you'll find it. So just go to my channel before this video, see when this video is posted, and the video before that is about 5-minute entries. So 15-minute, 30-minute will work, everything will work, okay? So number three out of 4 here, and we're gonna get into some examples because I love to show you guys examples. Number 3 is going to be clean zones. Why do I want to be trading in clean zones? You see these clean zones? Here's a very nice example. If I draw one line here like this, these clean zones, so where we have clean candles like this, is exactly where I want to be trading. Why? Because this is a smooth area. There's no friction here. What causes friction in the market? Ceilings and floors, which is known as support and resistance, because price can reject that. There's structure there, we can reject it. Why can we reject it? Because there was an opposite amount of orders in that zone, we could potentially reject from that zone there. Now, that's why marking your support and resistance is extremely important, or having a markup to know where you can and cannot trade. If you don't know where you can and cannot trade, guess what? Just how the market works, you're probably going to trade in the wrong place and lose, because that's just how the market works, right? And we want to avoid that. And if we can avoid that, that's exactly what we should do. So we can, how do we avoid that? Well, we concentrate to look for clean candle zone. So what's a clean candle zone? Basically, no support and resistance. Here's a resistance. How do we know that? Bullish candle followed by a bearish candle creates a resistance, and a support down here is a bearish candle followed by a bullish candle. As I've mentioned in the video on my channel, is in-depth videos about that concept itself. I'm hooking you guys up, you see, not letting you stranded there. There are videos to hook you up on that stuff there, okay? Now, it will take some time to learn to mark your support and resistance. Everyone who joins my exclusive group where they trade with me live, I actually make them send me support and resistance so I can double check it, and they compare to my analysis on a daily basis. So it is a skill that will have to be learned, but don't be upset if you get it wrong here and there. It's just part of the game, all right? So these zones between the support and resistance are money zones. Like here, look at the thing, because what price ends up doing usually is, if it could move clean in the past, we can expect a clean move in the future with closes above, with volume time. That's very cool. Because if I were to switch on volume, Asian session, what did we say? Gold was moving during Asian session. So we close above. Look at your close above. I can draw a line here. That's your close. Perfect close. What do? We move. We move. And that's what ends up happening. So because of volume, right? Volume and clean zone. So you see how it's put together. Where's our next clean zone? Our next clean zone is here. Guess what happens? We mess about. Actually, technically, our next clean zone is above this previous support here. So once we get above there, there should be a clean move, which we could see ended up playing out. And then our next major clean zone will be above there. And once we get above that, we should see a clean move repeat. And you can see, remember, we drew this example. Reject, reject, reject. Wicks don't matter here. They're just not doing what candle closures could not do until we actually, look at that. Same thing we drew, right? We drew this at the beginning. Heavy rejections coming from this zone. Why? Because we didn't close above. And watch what happens the minute we close above. When something finally closes above, look at what the difference it makes here. Look at the difference it makes. Can you see the difference? Like, this is some golden shit, man. I'm telling you. Like, look how many times it rejected. I mean, how many people got cooked here? Jumped into buys, then came back down here. They tried to sell the lows. They were too scared to enter here, so they sold the lows. It went in a little bit of profit. They tried to hold more, reversed on them. Then they started seeing going in their direction. They continue to hold. Then you get stop loss hit. Then you take buys with tight stop loss because you don't want to lose anymore. Then this stops you out. Then it ends up playing out here. And then, you just end up in a mess. You know the story, guys. I don't have to tell you. So this is why making things with rules are very important. So closures, very good, right? The last step here, which is going to be the biggest step, is I want some type of structure. What do I mean by structure? I don't want straight green candles. I don't want to buy after straight green candles. I don't want to sell after straight red candles. I want some sort of break in the market, some sort of pause, something like this to give me the confirmation that price is, I'm not buying a high, I'm not buying a low, because normally after a big push, it's probably going to be close to a high. Big push ends up being a high. Big push, does this end up being a high? Let's have a look. Yeah, it does, right? So it ended up being a high, right? Same thing, big push down, ended up being a low. So I don't want to be part of that. So let's get into a few examples to keep this video nice and short. And here's one that we took, close above, right? These are all taken live. I take them on stream. Join us Monday to Friday, London session if you're around. Pull up on YouTube, all for free. So this is an entry I took here on DAX. Close above, structure, boom. Amazing push. Volume. Why volume time is so important? Exactly. Now this is a bit complicated because you see the small resistance here. I'd like to show you this as a 5 minute. So I want to show you that it always doesn't look perfect, right? Because many people think trading has to look perfect. Doesn't. There has to be scenarios as long as I have room. Here's one that will be a little bit more clear, more of a perfect trade where we have structure. We close below, clean candles. Here's the close. I didn't enter before the close and boom, we get a nice move down. Here's another one. We also get a nice push. I do have a journal here. You can go through my journal. This is linked in the bottom of the video. You can see the trades that I take on the journal and watch back the live stream. Here's another one, clean candles, close below this. That's a beautiful one as well. So these are all solid ones. I mean, you can go through this yourself. You can watch the live stream recording as well to see the trade played live. But I hope that this video about my entry strategies and some key tips, my 4 key tips from my entry strategy, have really helped you. If they have, let me know in the comments. Leave a like on this video. Amazing. So I hope that this has been useful as well. Now that you have all of these fundamentals, phase 1 is basically coming together now. You basically have the strategy. But what's going to make this different? And for those who have been in my channel before, you need to continue watching to the end because I'm giving you a 12-week plan. It is 6 months into the year when I'm posting this. If you have not seen changes in your trading, you need to make a change. You can watch countless amount of videos online, but you don't apply the skill, which is why number 4 is application of the entry strategy. So I actually want you to go into the charts and start to apply these entry strategies and try them out and force yourself to follow them to your best ability. Write them out and go and do that. It's going to be extremely important here. You have the tools. You can watch back the sections if you missed anything. And once you do that and you start to apply it, it's going to allow us to go into phase 2. So phase 2 here is where we start to get into actual work. Yes, you have to work to become profitable, and that is the truth. So now week 1 of phase 2, which is actually week number 5 of our whole thing, but I like to split it into 3 phases for a 12-week program. You're actually going to need to do some work backtesting here. So when it comes to backtesting, you have to backtest with intent and with a strategy that you've practiced already. So you have to understand the strategy and make sure you're backtesting those rules, not just simulation trading random trades. So I'm going to go into a simulation and remind you, I'm going to try to take a trade as quick as possible. I'm not going to explain too much, but I will run into a simulation to show you the trade in action and how I want you guys to practice the trades. So let's go run into that. All right, guys, so I want to show you how to simulate here and how to actually backtest properly. So I pulled up a simulator here. I'm using Pip Lab Sim. This is a simulator that we own and one of the passion projects that we've created. So basically, you start from daily time frame, the same stuff we covered, right? So what can we see on daily time frame? Beautiful close above here, looking like continuation for the day. Close above this previous daily resistance. We can put that PDR, previous daily resistance, and we start our markup process. I'm gonna fly through this. You can slow it down, watch it slower, but I want to keep this video short so people actually click on it. 4-hour time frame, we're gonna do the same thing. Let's go ahead and mark 4-hour resistance. Gonna be up here. Gonna put this as 4-hour resistance. Now remember bias. Today bias is mixed, so we could be looking for buys and sells. Daily looks very promising for buys. We've been in an uptrend here on gold. Pretty nice. Every single pullback, once we created a support, we've managed to push out. And what's more important is this candle closed above this previous zone. We closed above, we pulled back, and now we're trying to reach back up. So we do the same on 1 hour here. 1 hour is clean towards the highs here. We have nothing, clean candles. Remember, that is the zones we want to trade in, where it's clean, no resistances, no supports. Only next one is the 4-hour. Same story on 30 as well. And our entry time frame, which is the 15, we're looking like we have similar story here. So it's a bit early now. For me today, buys would make sense if I can find a way to buy to the 4-hour resistance, meaning we create structure, we close above. I'll take a buy. If not, then I'm actually going to take a breakout trade above the whole range here. So I'll look for price to break out the 15-minute resistance. Here is all-time high, so it's clean candles basically. And I look for that buy. So let's start skipping candles to see. So nothing yet. We need structure. Remember, we need a support and a resistance, and then to close above that. So we have nothing yet. We skip, we skip. We're creating some sort of structure, so I would need a close above here. Okay, good. Okay, now we're not closing above. We closed bullish, but we didn't close above, so it's not a valid entry. We rejected it again. Can we close above? We reject it again. Now we are closing above, but it's too deep here. If you look at our range, we only have like a 10 pip range, and our stop loss below these lows here is about 36. It makes no sense. So it's not something I would take. But now we do have a close above the range. The only problem is this is a straight push. But with volume, the stop might not be that big. So we could run stop loss back inside the range here. Actually, I'm going to teach you something a little bit advanced. So typically in this position, here's our structure that we made. We would want to put stop loss. I actually made a stop loss video last week, so watch that video if this will make sense. But normally we put stop loss below the previous candle. But right here, for more protection, I'm just going to put it below the 4-hour candle here, just in case price wants to come a little deep. This is not a very, very good candle. The other way would be to be using 5-minute, but I don't want to teach you in that video here. But I want to just give you an example of how you'd backtest a trade. So essentially the good thing is now what we're going to do, we're going to place a trade. I want to enter break of high, stop loss is going to protect here, and it's going to be a buy. And I'm going to confirm risking 1%. We can see that buy order be put in. I'm actually going to switch to 5-second ticks, and I'm going to play as if it was real life here. So we want to see a bottom wick first, which I didn't wait for. So that's, you know, what we want to see first. And there's the bottom wick, and you would have been entered anyway. So, okay. All right. So enter the trade. Now we speed this up just to save time. And we're in profits now. We'll be looking for a 1-to-1 first. So let's put this position on. This is a 1-to-1. Stop losses here. 1-to-1 would be right there. Since we're at all-time high, 1-to-1 would be good. That's my target for now. If there was previous resistances, then I would target the next resistance, right? Because I'm taking a buy. So we're going to play this, go into some drawdown here. Quite heavy drawdown. I'll show you the P&L. P&L is here, minus 377. It needs to respect this support here, otherwise we're going to be stopped out. And this pullback is fine. We did close above, starting to reject. Honestly, if this next candle closes above, this would have been the best entry. To wait for structure, close above, and then put stop loss below this low like this. That's the best entry, right? But it's not closing above. All right, it's going to close in about there. Ooh, wow. Big pop up here. Okay, you wouldn't have been able to enter that. Holy shit. We're already at a 1-to-1 here. Damn, that tapped a 1-to-1. Need to slow this down. See if we can get out at our 1-to-1. So whenever you get this big of a push, first thing, stops go to break even. No point of losing this trade. And hopefully there's your 1-to-1. Just close the trade there. Boom. And that's TP hit. So you want to practice that, gather data. You'll have history here. You go ahead and you check your history and you start to see your trades. Build data, practice, journal it. That's the way I want you to backtest. Now, if you're interested in this platform, use the free version. It gives you 1 month free of data on gold, GJ, all a load of pairs. So use the free version. If you're interested to buy it, what I'm going to do is I'm going to do a discount code of 12% and use code 12, the word 12, okay? Use the word 12. Then I know you guys come from this video, and I'll run this actually for 12 weeks. So if you stuck through the video, you know that. If you don't, you don't. It's only 12%, nothing crazy, but you know, whatever. So appreciate you all, and let's get on with it. So perfect. Now you might be asking, what should I do? You should be paper trading for now. Paper trade for now. We're only week 5. Yes, you're a month into trading. If you've done this before, you still should paper trade a bit just to get used to the strategy, in case you are an experienced trader but adapting to the strategy because other things you've tried has not worked, which is normal. But in week 2 of phase 2, what you're going to start to do is actually journal here. So I'm going to show you guys how to journal, and I will also include a free journal. I'm giving you all the tools. I think this video deserves a like and a subscribe because I'm really here to try help you guys into make something that is straightforward and actually gets you results here, just like it got me, because what I'm teaching you now is exactly what I use to trade the market. So let me go and show you how to journal. So this journal is actually going to put this in the description of the video here. It's going to be called my stream journal. This is also my personal track record of all the trades I've taken on stream. All you have to do is go file, make a copy. Now, obviously, I post the YouTube link so you can watch the stream live to see that the trade was taken live. But you can change this to anything you want it to be, right? So I would prefer you keep this as time. Time is a very important factor because you want to be replicating. If you go through my journal all the way back from 2023 here, you can see that the times are very similar, 11, 12, 10, 11, 12, 10. Just because of daylight savings, sometimes it's an hour later, an hour earlier. But you can see that it's very, very consistent in time. So I prefer you keep time, how much you win, how much you lose, and what pair you're trading, of course, and the amount in pips. Pips don't really matter too much. A more important column is how much your return is. But I want a simple journal and I want notes. So make this column smaller and make the notes bigger. If you can see, even at my stage, after 5 years of trading, I am still taking notes. I am still writing down what I could have done. Like, look at this, broke plan, big capitals. I broke plan, but you need to answer why. Why did you break the plan? For me, I know why I broke the plan because it wasn't my plan. I know what's in my plan, so I must have broke one of my rules, okay? Let's go see if I did that after I've done that, right? I'm sure I have broke it once. I do remember. Yeah, bad markup, completely missed a level. So that's not breaking a plan, but that's a terrible mistake. Bit of a laziness, but that can happen once you've been trading for so long. You can have that laziness, right? So I missed up a level, cost me 1% from not marking a level. So this is why the first section of the video was levels. It catches me today. You can see 2025, I have done a mistake and not marked a proper level. So super important here to understand that. And this is exactly how you want to journal. All you have to do is copy the date you take the trade. You can journal your backtesting trades and your live trades and compare. I would love to see you guys do that. Compare live and backtested trades. Extremely important. So this is exactly how I want you to journal. Keep it nice and short, simple journal. You could make more advanced journals, and you can include also emotions, which I have here as another tab, which is more of your emotions. You know, exited too early, entered too soon, some of this stuff. So I also encourage you to have a look at that. So once you start doing that, now you're into a routine. You just continue that routine. You journal and trade. And week number 4, you're going to have data collection, right? So you're just trading. You're going to see by week number 4, you would have taken trades. It's another week of trading. By now we have 1 week, 2 weeks, 3 weeks, 4 weeks. We have 4 weeks worth of trading. You started the journal in the second week, and now you have 2 weeks of data. So we have a little bit of this, not enough, but the backtesting data should jump you up a little bit here. So once you have that data collection, I'm going to show you exactly what to do with that in the next phase. So congrats, you made it to phase 3, the last phase of this 12-week program. And this is going to get you now one more step closer to profitability. So in week 1, you want to analyze this data. You're going to have mistakes. You're going to see things that went wrong, entered too early, didn't wait for break of highs, stop loss placement was wrong. And your job is going to be to correct that. In the beginning, correcting things will be extremely simple, which is why week 2 is you're making those adjustments, right? So you can even do that on week 1. Analyze. It should take a weekend, really. The weekend you can analyze all of this, find your mistakes, and then from week 1 you get into it and actually start to fix your issues. And you're going to fix these adjustments, and eventually you're going to need feedback because there's some things that you're doing wrong that you don't notice. When you start to look at the charts, be like, I don't really see what I'm doing wrong, or I don't know where my market is wrong. Ultimately, that is where you need feedback, okay? And this is where a lot of people, why selling a course online doesn't really work to help you, is because you missed the application part, right? So if you're ever going to pay for something in this industry, pay for someone's time to help you apply instead of just the information, because the information is, although a supplement, it's not going to be the thing that really gets you past this phase 3. And what comes after phase 3 is profitability, right? So this phase 3, unfortunately, can last quite a long time, but it's all dependent on each individual. So you need this feedback, and this is exactly what I do with the guys in the exclusive group. We get feedback from each other, and well, I'm mostly giving the feedback there all of the time, and that's how you're helping. So a lot of people there are in phase 3, helping them to get along, and even people who are in the beginning stages are working through the content and stuff like that. Although it sounds like it's a plug of that, it is generally a part of the journey. It will make the journey faster, it will help you, and of course trading with me live on a daily basis will help. I kind of sound like an influencer right now, but it is a necessary part. Now you can get feedback from your friends, try to give self-feedback, that is totally fine. But ultimately, I'm trying to give you the path of least resistance. And when there's opportunities out there that I actually stand by and trust, I'm going to mention them to you. So week number 3, guess what? Correct and improve. That's it. All you have to do is correct and improve. You know what you're doing. You have the idea. Just correct and improve. Correct and improve. And if it's not working, you're doing something wrong. And that's where it can help for someone to tell you what you're doing wrong. But otherwise, you're trying to correct that. So week number 4 is just going to be time and volume. So in order to build a skill, you need experience. And time is something that cannot be earned. And it's something that you just have to be patient for, right? You have to be patient for time because you need time in the markets. I know it sounds confusing. I'm trying to get my words out in a simple way, but essentially what I'm saying is you need experience. Experience plus volume. You need to do the same thing every single day for a long amount of time. Keep switching strategy. You're going to fail. You're going to mess up and you're going to have a hard time. So time and volume is going to equal a skill. This is Alex Hormozi. He likes to say it like that. And it is true, and especially in trading as well. So a little disclaimer here. If you're not profitable in 12 weeks, that is totally fine. But guess what? The reason I made 12-week program is I believe if someone starts from scratch in 12 weeks, they can start to see profits. What I'm really not confident on is that you will be fully consistent for the majority in 12 weeks. Why? Don't get me wrong. It is possible. But why? Is because you haven't even experienced 1 year of trading. You don't know how it is to trade a monthly candle 12 times. You have not experienced the market cycle from January to January. Different times in the market cause different things. And what causes you to be emotional on the charts and make stupid decisions is the charts themselves. So you're being affected by the charts and it causes you to make stupid decisions and ultimately you fail, but you don't have the experience for that. So although you can make profits in 3 months, you will not be consistently profitable. Well, you might, but I highly doubt it. From my experience and what I've seen, you need to at least experience 1 market cycle. But if you repeat this for the 1 market cycle and consistently correct and improve, you're on the right path. And I definitely then see you being profitable and consistent, which is more important than profitable, because anyone can claim profitable after trading profitably for 1 month, passing 1 FTMO, whatever you name it, taking 1 withdrawal, but the consistency over time, like look at my journal 2023, that consistency is what matters, because it's long-term what pays, not a get-rich-quick scheme. This is a don't get poor slowly or get poor slowly if you are just chilling out money, trying to do BS and not making a change. So hopefully this video has helped. I really do hope you guys enjoyed it and found something valuable out of this video and put things into place. And let me know in the comments if you did enjoy it. I do read the comments and reply to the comments, so do some work there and subscribe to the channel. You know the drill, guys. Take care, trade sharp, and hopefully catch you guys very, very soon. Peace.